Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Nikola, ticker symbol NKLA. And so I wanted to go over this chart because between December 6th and today, as I'm recording this, December 7th, there was a massive gap down with the stock price dropping by more than 23% on the day, December 7th. Also, if we look at the candle pattern for the day, that looks like an inverted hammer, which is a bearish sign. So I suspect the price will go down lower. And so let's first think, why did the price tumble today? So I'm just going to click on this link to the Motley Fool so we can get an understanding of why the price dropped. And so it looks like Nikola is looking to raise another $300 million. And so that means that existing shareholders will be further diluted as a result. And also, an unexpected recall recently cost the company about $62 million. So this is just a bunch of bad news for the company. And so that makes sense why there would be such a large drop. However, I do think that there could be some good news in this. If we just take a step back, I did highlight some levels that I think could be important over the next few trading days. And so one of those levels is this yellow line, which is marked at 85.5 cents, which is really just based on four tails of these candles over here crossing that level. And so that seems like it could have been an important level of support. However, if we zoom in, we can see that the high of the day, not even the open, the high of the day was lower than that yellow line. So that's not a good sign. The next level that I think might be important is the orange line, which is at 70.5 cents, which is based on the lows over here from, let's see, May, the middle of May 2023. And so I do think that those could serve as a potential next level of support. However, if that is broken, this red line is drawn at 58.4 cents, which is based on the lows from the end of May over here. Again, however, if that level is broken, the next level of support that I see is the all-time lows at 52.1 cents. Right here. So I do think that there is a significant amount of downside for the stock price over the next few trading days. However, once it is announced that the share raising of money, selling shares, once that is announced as being complete, I do think that the price could turn around. So I think it's good to look for not bearish signs like this inverted hammer, but if there are signs over the next few trading days of a flattening out of one of these levels serving as support, I do think that there is potential for not only a turnaround, but a fairly large move to the upside. So let's see if we draw a line from 52.10 and measure that back up to the white line, the bottom of that wedge that I have drawn there. That represents a 76.98, approximately 77% or higher actually, move to the upside. So over the next few trading days, I do suspect that the price will drop a lot more. But if it does bottom, there could be, a violent move to the upside. And also, I do want to note that this wedge that I've drawn is not only based on these 2 points that you can see highlighted with little blue circles there, but the top of that wedge has served as long-term support over here and then resistance breaking out. And so that goes back to, let's see, goes back to May of 2022. And so it is possible that, if the price does bounce back getting into this wedge, it could test the top of that line, which would be, potentially at a price of, over $1. So, while I do think it is really, really risky right now, I do think that there could be a turnaround, especially, when you do consider the RSI, it's getting into below 30 territory, currently at 29 0.83, suggesting that it is oversold. However, I do think it will become more oversold. But if we look back in history, like in this past September, when it was oversold at an RSI below 30, there was a violent move to the upside. Again, here at the beginning of June, a violent move to the upside. However, the RSI has been lower, like in the middle of April of this year, and price didn't really go up that dramatically, or at least it took some weeks for that to happen before dropping lower and then moving up violently. So I do think there is potential for a violent move to the upside, but I do suspect that, especially with this bearish inverted hammer, that it will not only break below 70 cents, but I do think it will test 58 cents at the red line, if not testing all-time lows at 52.1 cents. And if you found this video helpful, make sure you like it, share your thoughts in the comments below, and subscribe to the channel for more videos like this. Thanks a lot for watching.